Hello everybody, what's going on? So a few big updates are coming from NIO Just. Company is officially launching the pre-orders for the highly anticipated 5-seater variant of its flagship third generation ES8 on June 28th. This is not just another minor model variation. This is a massive multi-layered strategic shift designed to aggressively lock the highest volume segment of the premium luxury SUV market, directly addressing the ultimate bear case against Neostock and positioning the company for an unprecedented revenue expansion in the second half of 2026. To understand why this specific announcement is triggering major conversation among institutional investors, we have to look at the structural reality of the automotive market. For years, the flagship ES8 has been NIO's crown jewel, dominating as luxury three-row executive carrier with its premium 6 and 7-seat configuration. It has been a massive contributor to NIO's bottom line, helping drive the company to its first ever quarterly profits. But 6 and 7-seat configuration, by their very nature, targets a specific administrative, corporate, or large family demography. The true volume, the real meat of the premium luxury SUV market, lies squarely in the large 5-seat category. Buyers in this segment are looking for maximum rear seat legroom, unparalleled luxury, and immense trunk space without unnecessary bulk or weight of the third row. By opening the pre orders for the 5-seat ES8 on June 28th, NIO is stepping directly into a much larger sandbox, opening the floodgate to an entirely new cohort of high net worth buyers who previously looked elsewhere. From a manufacturing and project standpoint, this rollout is beautifully optimized. This new variant utilizes the powerhouse third generation NT 3.0 platform. We are talking about a dual motor, all wheel drive luxury monster pushing out 520 kilowatt of power. That is nearly 700 horsepower, delivering flagship performance while riding on an advanced intelligent dual chamber air suspension system. Because it is built on the existing architecture, the incremental research and development cost for NIO to bring this 5-seat variant to the market is remarkably low. Yet the margin profit remain incredibly high. Flagship vehicles carry the highest average selling price and the highest gross margin in NIO's entire portfolio, I would say. Selling more ES8 units, especially in a high volume 5-seat configuration, is a direct catalyst for expanding vehicle gross margins, driving massive operating leverage straight to the net line. Now let's address the immediate concern that always pops up whenever a company expands its lineup: the risk of product cannibalization. Skeptics are already pointing out that neo mass market sub brand Onvo is ramping up its own large 5-seat lifestyle SUV, the L80, alongside the volume segment L60 refresh. The bare narrative claim that a 5-seat ES8 will simply steal sales from Onvo, but this completely misunderstands premium brand tiering and customer demographics. Neo management has been explicitly clear about this. There is a massive price and positioning gap here. The Onvo L80 is a highly practical, imaginative, family oriented lifestyle vehicle aimed at capturing market share from mainstream players like Volkswagen, Toyota, and Tesla Model Y. The ES8, on the other hand, is a ultra premium executive flagship starting over 400,000 yuan. There is a price delta of well over 100,000 yuan between these segments. They cater to completely different tax brackets. In fact, the multi brand strategy is creating a powerful showroom network effect. Recent operational data from NIO's retail shows that when a brand introduces a high visibility top tier flagship or expanded variants, overall foot traffic to the showroom skyrockets. High income buyers walk in the stores to inspect the new executive vehicle, and often find exactly what fit their specific lifestyle. Whether it's the administrative luxury of the ES9, the driver focused ET9, or the newly streamlined 5-seat ES8, far from cannibalizing each other. These models are actively stacking together to capture every single silver of the premium electric vehicle market. Look at the broader delivery momentum we are witnessing right now in June 2026. The company's product lines are humming across multiple fronts. June represents the very first month of where the refresh Onvo L60, the Onvo L80, the flagship ES8, the ES9, and the mass market Firefly model are all delivering simultaneously, stacking their production ramp up together. In the final week of May alone, new orders for the ES8 surged heavily, proving that underlying demand for nameplate remain remarkably robust. With the 5-seat version opening up for the pre-orders on June 28th, the initial deliveries expected to hit the pavement shortly after. That is the reason why I would say here that NIO is securing a dominant backlog of high margin orders that will carry its financial performance through third quarter and fourth quarter. And when you look at the hard financial numbers, the investment thesis for new stock becomes incredibly compelling. The company already demonstrated that its underlying business model is fundamentally profitable when operating at scale, turning its first ever quarterly GAAP operating profit recently. Now, as monthly deliveries across the combined Neo Onvo and the Firefly ecosystem march aggressively towards 50,000 unit milestone, the fixed cost absorption is going to trigger an explosive expansion in earning per share. Wall Street and global market have historically penalized NEO for its heavy infrastructure spend, treating it like a capital destructive cash burn. But what the market is finally starting to realize is that the heavy lifting is done. The foundations are poured. The swap stations are active. The multi brand platforms are fully engineered. And the factory lines are optimized. Now comes the harvest phase. Every new variant introduced, like the 5-seat ES8 on June 28th, representing a pure incremental value hitting an already optimized production machine. We are looking at a classic valuation disconnect. The stock is now being priced as if NEO is speculative, struggling startup facing growth bottleneck, when the operational reality show a mature, highly sophisticated automotive ecosystem expanding its addressable market into most lucrative segment of the industry with a massive backlog of orders, record breaking showroom traffic, a clean path towards sustained profitability, and an aggressive rollout of margin accretive luxury variant. The fundamentals of risk to reward ratio for new is skewed heavily to the upside. For investors who understand the numbers, who look past the short term noise, and who recognize the sheer scale of operational execution happening right now, Neo stock isn't just a defensive hold, I would say. It is one of the most asymmetric, high conviction growth opportunity in the entire global clean energy technology sector. And after this June 20th catalyst, bears will also say that the financial turnaround is already underway. So prepare now. With that said, thank you so much for being here. See you next one.